This is Nightly Business Report with Bill Griffith and Sue Herrera.
Stocks struggle. The market cannot seem to find its footing after last week's rout, making it difficult to figure out what might come next. New challenge. Rising tensions between the U.S. and Saudi Arabia are adding another element of uncertainty for investors. And the death of Sears. The store was once a part of the fabric of America, and now it's bankrupt. Those stories and much more tonight on Nightly Business Report for this Monday, October the 15th. And we do bid you good evening, everybody, and welcome. Sue is off tonight. Investors may have started the week hoping for a bounce back in stocks after last week's steep sell-off, but they didn't get it today. The market struggled all day, moving between gains and losses, looking for some kind of direction. Technology shares fell again as that migration out of riskier growth and momentum names continued, and key concerns like rising bond yields and trade issues were still very much in the mix. But investors today were also thrown another curveball: geopolitical risk, due to the rising tensions now between the U.S. and Saudi Arabia, which we will get to in just a moment. But first, the closing numbers on Wall Street, with the Dow down 89 points, closing at 25,250. The Nasdaq was down almost 1%, or 66 points, and the S&P lost by 16. Mike Santoli tells us now what may come next for stocks.
With stocks falling more than 4% in a week and leading big tech stocks hurt even worse, the question entering the second half of October is whether the path of least resistance from here is up or down. The swift decline was prompted in large part by a rise in interest rates and some profit warnings by industrial companies, but the weakness also reflects dramatic flight of capital from the high momentum growth stocks that carried the major indexes for much of the year. This leadership void is one issue complicating predictions of a quick rebound. The major indexes late last week certainly looked almost as stretched to the downside as they did in February, around the time the market began to stage a slow recovery from the 10% drop from January's peak. But the S&P 500's failure to stay above that January high for more than a few weeks is adding to concern that investors are collectively bracing for a serious slowdown in earnings and profit growth heading into 2019. October is known for higher volatility and bruising pullbacks in stocks, but also for market bottoms that often set up a strong finish to a year. This is particularly true in midterm election years. All of this raises the stakes for corporate earnings season. Can another quarter of strong growth near 20% soothe investors' fears, or will the market once again fixate on the potential headwinds from trade friction, higher interest rates, and rising costs? The next few weeks will help answer these questions. For Nightly Business Report, I'm Mike Santoli.
Now, realistically, geopolitical risk is always in the market to some extent. But today, that risk was heightened as tensions between the U.S. and Saudi Arabia flared over the disappearance and possible murder of journalist Jamal Khashoggi. There are reports tonight that Saudi Arabia is preparing to admit that Khashoggi was killed as a result of an interrogation gone wrong. It is an issue being closely watched, not just by the energy market, since clearly Saudi Arabia is one of the world's largest oil producers, but also by corporate America, since companies like these, Honeywell, Raytheon, Dow Chemical, and Weatherford, among others, all do business in that country. Hadley Gamble is in Riyadh for us tonight.
U.S. Secretary of State Mike Pompeo is en route to Riyadh tonight as relations between the United States and Saudi Arabia reached a critical point over the disappearance and possible death of Saudi journalist Jamal Khashoggi. The move came as Riyadh looked to respond to comments by President Trump over the weekend, promising severe punishment if the kingdom was involved in any way in Khashoggi's disappearance or even death.
There's a lot at stake, and maybe especially so because this man was a reporter. There's something, you'll be surprised to hear me say that, there's something really terrible and disgusting about that if that were the case. So we're going to have to see. We're going to get to the bottom of it, and there will be severe punishment.
The Saudi government broke almost 2 weeks of silence on Sunday in a statement denying involvement and threatening retaliatory measures if any actions or sanctions were leveled against it. King Salman on Monday announced an internal investigation would take place, as well as a joint Saudi-Turkish inspection of the kingdom's consulate. Speaking to reporters outside the White House, President Trump said the Saudi king was firmly denying his government's involvement and raising the possibility that rogue killers were somehow involved.
The king firmly denied any knowledge of it. he didn't really know. Maybe, I don't want to get into his mind, but it sounded to me like maybe these could have been rogue killers. Who knows? We're going to try getting to the bottom of it very soon. But his was a flat denial.
Meanwhile, the list of prominent international business leaders who plan to boycott Saudi's second Davos in the Desert Investment Summit next week is growing, with J.P. Morgan's Jamie Dimon, BlackRock's Larry Fink, and Blackstone's Steve Schwarzman now joining the list. For Nightly Business Report in Riyadh, I'm Hadley Gamble.
Now, the market is also assessing issues in Europe that could have economic consequences around the globe, namely Brexit, of course. Negotiations over Britain's exit from the European Union grounded to a halt today after the EU and the UK failed to reach an agreement on a key issue that has been at the forefront of those talks. And as Steve Sedgwick reports now from Westminster, the deadline is fast approaching.
Hopes for a Brexit breakthrough at the start of the week appear to have been dashed. The world's media had been prepared for an announcement from the EU and indeed from the UK government within 24 hours to say that a key breakthrough had been made, but after the weekend that appears not to be the case. What has been the main sticking point is a backstop for the Northern Irish border. Of course, Northern Ireland, part of the United Kingdom, the Irish Republic, part of the EU, and to create a soft border, a non-hard border with frictionless trade has always been one of the key issues, and one which appears a little bit too hard to achieve at this moment. Mrs May wants a customs union during a transition period for Brexit with the EU. The EU want only Northern Ireland potentially to be in that, and if they were to go for a UK-wide transition period customs union, then they would want this to be for an indefinite period. That is something that will not pass with Mrs May's backers here in Westminster, or indeed her backers in the Northern Irish Assembly, principally the DUP as well. So at the moment it appears to be sticking point for Brexit. What does that mean for Mrs May's future? What does it mean for the torturous negotiations of Brexit? Only time will tell. This is Steve Sedgwick for Nightly Business Report in Westminster.
Christina Hooper joins us now to talk more about those stalled Brexit talks and the rising tensions between the U.S. and Saudi Arabia. She is Chief Global Market Strategist at Invesco. Good to see you again, Christina. Thanks for joining us tonight.
Great to see you.
Let's start with Saudi Arabia. Clearly, oil market is something that people think about. A lot of analysts have gotten ahead of themselves, maybe thinking that if there are U.S. sanctions against Saudi Arabia, maybe we could have another oil embargo of some kind and sharply higher oil prices. Let's start with that. Is that possible, do you think?
That's certainly a possibility. We heard from Saudi Arabia this weekend making something of a veiled threat, suggesting that they would retaliate more in a harder fashion than actually the sanctions against them, and also alluding to the fact that they do play an important role in the global economy, right. And that seemed to be suggesting specifically the ability to embargo oil. So that takes us back to the horrors of the 1970s with that oil embargo.
Which some of us remember well. Now, the other part of this story, Crown Prince Salman has wanted to diversify the Saudi economy so it's not so dependent on the vagaries of the oil market. We all remember when he was here in the United States trying to build relationships with various corporate CEOs. Those companies, I'm sure, are watching these developments very carefully right now.
Oh, absolutely. We've already seen a number of executives pull out of the big forum, economic forum that was going to be held and is, I guess, going to still be held in Saudi Arabia soon. So clearly corporate executives are watching this closely because keep in mind what attracted investment to Saudi Arabia, what attracted these partnerships was Mohammed bin Salman's commitment to reforms. And that's what was so attractive.
It'll be interesting to see how that plays out. Now to Brexit. Boy, we've gone back and forth, positive, negative, positive, negative. What happened? And you've got the EU summit coming up later this week, which theoretically is the deadline to reach a decision on Brexit. What happens if they don't have a deal trade-wise here, do you think?
Well, first of all, I would say it looks likely that they will not have a deal. That after negotiations this weekend went awry, it seems that we will not have an outline of an agreement for the EU summit this week. Now, certainly that could change. Anything could change. But that seems to be the more likely scenario. And that then impacts the timeline. Because ideally, we would have had at this EU summit an agreement on the outline. then working towards finalizing that deal before the EU summit in November.
Right.
Now, it could very well be the case that the November EU summit is devoted to coming up with what kind of a relationship and what could happen if there is a no-deal Brexit.
Okay, now we remember, and very quickly here, I'm trying to get a sense for individual investors what to expect if there's no deal. We know the last time when they voted in favor of Brexit a few years ago, markets sold off sharply. What happens this time, do you think, if anything?
I think there could be some more volatility. I don't think we'd necessarily see as sharp a sell-off as we saw during Brexit, because we're coming to that realization, a growing realization, that a no-deal Brexit is a very likely outcome. So I would expect more volatility. Keep in mind, this is just contributing to all the other geopolitical uncertainties that are impacting markets right now.
All right. Christina Hooper of Invesco, thank you for your insights again tonight.
Thank you.
Here in the United States, the annual budget deficit has risen to the highest level in 6 years. The Office of Management and Budget said today that the deficit for the last fiscal year hit $780 billion. That's a 17% rise from a year ago. Spending increased across a number of areas, including defense, Medicaid, Social Security, and disaster relief. And at the same time, revenue rose only slightly due to the tax cuts for corporations and most individuals. Well, it's time to take a look at some of today's upgrades and downgrades, and we begin with shares of McDonald's tonight. That was upgraded to outperform from in line at Evercore ISI. The analyst cited the company's more defensive business model that can withstand persistent market volatility, and the firm's base price target is now $185. McDonald's shares were down a tick today to $163.67. Ralph Lauren was upgraded overweight from neutral at JP Morgan. The analyst cited the potential for earnings per share growth. Price target $150. Ralph Lauren shares rose 4% today to $126.51. Lululemon was upgraded to outperform from neutral at Wedbush. The analyst cited the company's data analytics and called the leadership team the best in class in that industry. Price target now $176. Shares rose a fraction today to $144.46. Still ahead, the retailer that changed the way Americans shop enters its next chapter, bankruptcy. Two major defense companies are getting together. L3 and Harris today announced an all-stock merger of equals to create a $33 billion military technology giant. It would become the country's 6th largest defense contractor, and the market clearly approved of the deal. Today's announcement resulted in both stocks trading sharply higher. Walmart is hoping to grow sales with its latest e-commerce deal. The nation's largest retailer said that it was buying online lingerie company Bare Necessities for an undisclosed amount. The purchase adds another brand to Walmart's growing e-commerce portfolio, which already includes Flipkart, Bonobos, and Jet.com. And now from the nation's largest retailer to one that used to be. Embattled department store Sears Holdings filed for bankruptcy today just before a $134 million debt payment was due. Sears has been struggling for years, of course, to increase customer traffic and stem a decline in sales. Not at all what might have been expected back when that company was the king of retail, the original Amazon. Few icons reach the heights that Sears once knew.
Sears Roebuck, when I was growing up, was the big deal. And it's very sad what happened.
It first sold watches in the late 19th century. Later, its catalog sold pretty much any household item you could think of. And in 1906, it became the first retailer to trade stock at the New York Stock Exchange. It was a component of the Dow Jones Industrial Average for 75 years. Brick and mortar stores began to appear in the 1920s, and Sears started popular brands like Craftsman Power Tools, Die Hard Batteries, and Kenmore Home Appliances. It gave us the satisfaction guaranteed or your money back policy. In 1973, it opened the Sears Tower in Chicago, then the world's tallest building. Later, it sold it in the 1990s. In the 1980s, Sears bought real estate company Coldwell Banker and insurance giant Allstate, creating the Sears Financial Network, which spawned the Discover credit card. It had an early retail website in the 1990s, but it failed to keep up with Amazon or the other big box retailers like Walmart, which replaced Sears as the nation's largest retailer in 1990. Years after its 2005 merger with Kmart, when hedge fund manager Eddie Lampert took over, retail analysts had been saying that bankruptcy was inevitable.
There never was a strategy that would ever have been viable, given the way Lampert chose to run the business. The notion that there's been some turnaround or some transformation in place is just plain bogus.
The steep decline at Sears includes cutting employees from 300,000 to about 70,000. It once had almost 4,000 stores. Now just 700, with plans to close 142 of those by the end of the year. And it has lost more than $11 billion since its last profitable year in 2010. By the way, Electrolux says that it hopes to continue selling its appliances at Sears, but that it cannot rule out a material hit in its U.S. operations because of the Chapter 11 filing. And separately, Whirlpool said it expects to see very limited impact to its business, since it now just has a very small exposure to Sears. Well, profit gains at Bank of America were overshadowed by lagging loan growth, and that's where we begin tonight's Market Focus. The bank did top Wall Street estimates and reported a 30% increase in profit, but investors focused instead on the underlying business, which showed that loan growth lagged its rivals and fees from advising on deals actually fell. Shares themselves fell nearly 2% to $27.92. Charles Schwab reported earnings that came in better than expected. Profits soared by 55% and revenue rose double digits, but asset management fees fell, a result of the price war going on right now in that industry, and that caused shares to fall nearly 3% today to $47.64. Meanwhile, investor Carl Icahn today disclosed that he now holds an 8% stake in DVMT. That tracks Dell's investment in VMware. Icahn urged shareholders to vote against Dell's proposed buyout of those tracking shares. Icahn said that Dell is trying to buy those shares at bargain basement prices. And during a phone interview, he did not mince words.
I don't think Dell is worth very much. I don't think Dell is worth anywhere near what he says it is, the Dell stock itself. But they have continually manipulated the corporate machinery to depress the value of the tracking stockholders.
Shares of Dell Technologies rose a fraction to $95 even today. And after the bell, trucking and transportation company J.B. Hunt topped earnings estimates, but did come up short on revenue. The company said that the miss was due in part to rising labor costs and service disruptions caused by Hurricane Florence. Shares were volatile in the after hours tonight. They finished the regular session up 2% to $111.53. Well, it's been a big year for Netflix shareholders. The stock has been a market leader, up about 75% since the beginning of the year. It has, though, started to falter over the past few months. And that's one of the reasons why there is a lot at stake when the company reports its results tomorrow. Julia Borston tells us what to expect.
This quarter, Netflix may have scored its most ever Emmy wins, tying with HBO for the first time, thanks to hits such as The Crown. But the stock is down 15% since its last earnings report, when Netflix reported disappointing subscriber numbers. And this quarter, analysts are once again focused on subscriber growth and guidance. The company projected it will add 5 million subscribers total, with over 4.3 million of them coming from overseas.
They missed the last quarter, and they missed the guidance as well. So, if they were to miss again, I think investors would take a very, very negative view of the stock going forward, given the high multiple, how expensive the stock is.
Netflix shares, despite their pullback over the last quarter, are still up 75% year to date, far outperforming the other FANG stocks. The competitive landscape is the other big question in focus when CEO Reed Hastings hosts his quarterly video call tomorrow afternoon, especially with Amazon increasing its spend on content and AT&T working to launch its own streaming service.
I think the biggest threat is really, you have companies like Disney and Amazon really looking to spend a lot more to really compete and remain competitive with Netflix. And that, I think, will force Netflix to spend more money.
This year, Netflix is spending about $8 billion on content. We'll see how much more it says it will spend next year on content, plus marketing to lure in viewers. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Still ahead, ready to rage? How one entrepreneur turned frustration into a business. Verizon said today that it had suffered what it called unprecedented equipment damage from Hurricane Michael. That's hampering the company's efforts to restore mobile service in that area. Verizon says it is working around the clock to get its network back up and running, but fiber damage does remain a challenge. Separately, in California, extreme weather conditions, big winds, have prompted local utility PG&E to take the unprecedented step of shutting off power to thousands of customers ahead of time to reduce the risk of wildfires that could be sparked by utility lines that might be damaged in those heavy winds. Very interesting. Casino stocks fell today on a report that revenue from operations in Macau were hurt by a typhoon and by trade tensions. Melco, Wynn, and Las Vegas Sands all closed lower on that report today. And there are growing concerns about the impact that rising interest rates will have on the casino business here in the U.S. It is just one of many headwinds that the industry faces. Contessa Brewer takes a look now at the future of gaming.
As gaming stocks declined, rising interest rates got a lot of the blame. But in Las Vegas, as 26,000 gaming insiders attended the most important conference of the year, they were looking for a silver lining. The CEO of Penn National Gaming says the impact on stocks largely was an overreaction.
75% of our debt is fixed. So we think the concerns about rising interest rates, at least from a Penn National standpoint, are way overstated because most of our leverage obligations are not sensitive to rates.
That's not true for Caesars, which may be more vulnerable, where 3/4 of its balance is tied to floating rates. Mergers and acquisitions are another big trend to watch.
What we're seeing now, especially in the last 18 to 24 months, is a lot of industry consolidation. We're seeing a lot of the smaller companies being acquired. And so I think you're going to see fewer publicly traded gaming companies, but much larger on scale and much larger rewards programs because of the increased scale as well.
The future possibilities with skills-based games and augmented reality is also wowing the crowd on the casino floor as a way of attracting a younger demographic.
If we can make the overall experience more engaging, more immersive, then it becomes a much deeper experience. And we think augmented reality can play a really powerful role in that.
With a Supreme Court decision this summer clearing the way for states to legalize sports gambling, it's become the hot topic, creating new partnership opportunities and innovative ways to get into the hands of bettors.
What we're seeing now with a lot of new products are applications that will allow the sports bettor to wager within a game.
Though analysts tend to temper expectations for big profits on sports gambling, gaming insiders are treating it like a jackpot win. And the head of the American Gaming Association expects it to be a $10 billion win for the industry. For Nightly Business Report, I'm Contessa Brewer.
And the state of New Jersey brought in $184 million in wagers during the month of September. That doubled the amount brought in during August and quadrupled the sum in July. You may know that New Jersey was one of the first states to legalize sports betting following that Supreme Court case that Contessa just mentioned. Finally tonight, here's a story we can all relate to. You ever have one of those days where you just want to smash something out or out of rage or frustration, or maybe just for fun? Well, now you can. Eric Chemi introduces us to the Wrecking Club.
There's a new business in town. The premise? Breaking stuff. People are spending money to come to places like the Wrecking Club in New York City to let out their rage and have a good time.
Oh, man. You got dishes, you get laptops, you get monitors, you get printers, you get TVs, you get furniture, and you can just, we set up a room for you and you can just go nuts. You ready to break some stuff?
I'm ready to break some stuff.
All right.
Tom Daly, the founder of the Wrecking Club, is a former accountant. He quit his day job, sold his car, and invested all his life savings to start this business.
A couple of house rules, and then you guys can go nuts, all right?
He says he's never been happier.
I do end up doing more accounting work now. I end up buried more in spreadsheets now. But the numbers mean more. You know, I mean, the work means more.
And business is flourishing.
All right, let's try this thing.
We have a package that starts at $25, and then we have packages that start at around $250. And the differences are how many people are in the room, how long the session is for, what stuff comes in the room.
From family get-togethers and corporate outings to bachelor parties and first dates, the concept has caught on quickly.
We set up the room for them. What they do with that room is up to them. You know, it's their time.
One of the biggest challenges of running a business like this, the junk. It's surprisingly difficult to source mass quantities of electronics and furniture that don't contain toxic chemicals.
Supply is hard. Supply is difficult to get, especially in quantity and at a price that works. You know, supply is a difficult task.
Daly buys his junk from a network of third-party vendors. I decided to check out the Wrecking Club firsthand. I admit I was a little nervous.
I'm okay. I don't need to break any more stuff.
For Nightly Business Report, I'm Eric Chemi in New York.
Finally, some sad news to report tonight. A titan in the tech world has died. Paul Allen, the co-founder of Microsoft, has passed away at the age of 65 from non-Hodgkin's lymphoma. That's Nightly Business Report for tonight. I'm Bill Griffith. Thanks for watching. Have a great evening. See you tomorrow.